Welcome back to Stockwatch, and joining me live in our studios tonight is Teng Boo, Managing Director of Capital Dynamics. Now, of course, before the break, we were talking about your work in Australia so far. Now, how does the Aussie market and economy compare with other regional markets in your view, Teng Boo?
Economy-wise, they have been very resilient. I think in Asia, you have Vietnam, you have Indonesia, and then there's Australia. In terms of performance vis-a-vis the developed markets, they are way ahead. But in terms of stock market performance, they have lagged the other emerging markets in Asia. Indonesia has done better than ASX. India Sensex has done better. The Shanghai Composite has done better, and the Vietnam index has also done better. But generally, the stock market performance for Australia has been about average. It's ahead of KL. KL has been a real laggard in this recovery. And the other advantage that one would have in the case of the Australian market is the strong Australian dollar. So I think if you look at just local currency performance, the rally has been about average. But if you add in the fact that the Australian dollar has strengthened very substantially, then you get the extra bonus from that.
So if people want to trade currencies, specifically the Aussie dollar, what's your view on that?
Oh, we don't encourage, we don't advise investors to trade currencies. It is really a game for the hardcore professionals. It is foreign exchange in economic analysis is one of the most difficult, it's one of the most complex. Please stay away from it unless you are really prepared for it.
Okay. Just now you were mentioning that Australia does lag behind Vietnam, Indonesia, and etc. Why is that exactly?
I think the Australian market is much more developed, much more matured. And in the case of Jakarta and Vietnam, partly because the indices fell much more substantially than the ASX. Vietnam, the stock market index almost collapsed. You know, it fell at its worst about 75–80%. Jakarta fell very sharply as well. Same thing for Shanghai. Shanghai, from the 07 peak to the bottom in 08 was about 70% down. So the severity of the fall explained partially the steepness of the rally.
So obviously the ASX would not be a good market to invest in for a high growth kind of investor, someone who's looking for high returns very, very fast.
Not necessarily.
Really?
That's probably a misperception. If you look at, say, over the longer term, say from 1990 to, say, 2008, the KLSCI has given a return, compound basis, of about 2 to 3% per annum. The ASX has generated about 7 to 9% per annum.
Wow.
So I think one cannot judge the performance of a stock market just on a 1, 2, 3 year horizon. And if you look at it over the long period, the Australian stock market has been one of the top performers in the world.
Right. Okay. So on that note, say I want to start investing in Aussie equities. Right. How can I do that, and what stocks or sectors specifically should I be looking into?
There are a couple of ways. I mean, you could open an account directly with some of the regional broking houses, or if you don't have the time, don't have the experience and the resources, you can always invest in our iCapital International Value Fund. It is an open-ended retail unit trust, and it's available to anybody, and it's priced in Australian dollar. So an investor will get the advantage of a strengthening Australian dollar as well. I think our approach is not so much in terms of sectors. We are more stock pickers. And in the case of the Australian stock market, although the perception is that it is a resource bias type of stock market, there is a fairly good range of non-resource type of counters. Because the economy is doing well, therefore companies in the banking sector, for example, in the consumer spending, in housing, they also offer pretty good opportunities as well. So I think the investors have to be looking out for companies that would be able to benefit from this transformation that is undergoing in Asia and that's being transmitted through the resource boom into the wider Australian economy.
Now, Australia is one of 42 countries that are involved in your fund, basically. So what's the weightage of Australia among the portfolio that you have?
It varies, really. The mandate that we have from our investors is that we can have 0% exposure to Australia or 100% exposure to Australian stocks. At the end of it, how many percent exposure we have is a function of how attractive the Australian stocks are vis-a-vis other stock markets in the world. And I think currently the Australian exposure that we have is on the low side, but we still have quite a fair bit of cash, and the current correction that markets are experiencing is really an excellent opportunity for us to build up our Australian exposure.
So what are some of the other exciting countries that you're investing in using your fund right now?
The bear market in 2008 was so severe that I think almost every stock market in the world is exciting to us. Every stock market that we look at, has got good values in it. Even the US, for that matter. Even KLCI, even Hong Kong, that's gone up so much. So I think the problem we have is not to find an attractive market. The problem we have is of the huge number of attractive stocks, what is the best that we can pick?
Now, to round things up, I've got a question here from our regular viewer, Victor Aoyong. He wants to know what sector in Malaysia that you think will outperform the KLCI for the next 3, 6 months, or even 1 year, and is commodity still a good investment?
Again, I have to say that we are not sector specialists. We are stock specialists. We like to focus on the company, valuation, businesses, and so on. And in that respect, there are still move away from the large caps. The large caps like the CIMBs, the Maybanks, and the Gentings, and all that. Move away from that. Move a bit down. There's plenty of undervalued stocks on Bursa Malaysia with good prospects, good management, and so on. And I think the fact that the Malaysian market has lagged most of the regional markets, that if the government can get its economic policies correct, that could be some surprising upside potential.
Well, there you have it. The word from Teng Boo himself. Thank you so much for joining us tonight, Teng Boo. Well, there you have it. That was Teng Boo of iCapital.biz joining us live here in our studio. And with that, we come to the end of Stock Watch for tonight. If you have any questions about investing that we can help you with, or any further questions that you'd like Teng Boo to help you with, please don't hesitate to email us at stockwatch@tv3.com.my. Also, don't forget to catch any interviews you may have missed on our show at our new blog, stockwatchproducer.blogspot.com. On behalf of our team, have a great investing week ahead. Until next week, same time, same channel. I'm Shani Imanli. Good night. Thank you, Teng Boo.
Thanks a lot.
Okay, we just